Hi guys. Woo. Hi, Assalamualaikum warahmatullahi wabarakatuh. Very good morning, good afternoon and good night to whenever and wherever you are for our listeners. So today we're gonna talk about repurchase agreement, or the other name are repos. So before we start our podcast today, I would like to introduce myself first. My name is Anur Aizul Hadi bin Safirul. You can call me Hadi.
My name is Muhammad Mukris bin Mustafa. You can call me Mukris.
My name is Shakirin Ifam bin Shahriar. You can call me Kirin.
My name is Muhammad Afizal bin Muhammad Nayaz Hisham. You can call me Bijan.
And my name is Muhammad Iqbal Rasmi. You can call me Iqwan.
So I guess you guys knows already who we are, and about today's topic, let's discuss a little bit further but not so deep, just to get you to know what is repurchase agreement. Before we started, let's give a round of applause to our main sponsor for today. Let's give an applause to Bank Negara Malaysia. We would like to give you a humbly thank you because you guys already sponsor us. So I guess if we didn't have any sponsor, I don't think our podcast will be as successful as today. So,
Yes, right.
Chris, what do you think about repo?
Well, hearing from repurchase agreement or repo names alone, I think it's already sounds stressful, you know.
Exactly, Mukris. So today we not gonna talk about financial too hard, just chill and simple as possible.
Alright, let's start from zero. Imagine someone listening with no background at all. So, firstly, what is repo?
Okay, first, we're gonna start about what is repo. At its core, repo is a short-term borrowing. One party sells their securities like government bond and agrees to buy it later at higher price.
So, sounds like buy now and sell later, right?
Yes, yes.
So, sounds like sell now, buy back later. I'm sorry.
Oh yes, that's correct. The extra amount is interest and cost is repo rate.
Well, so it's on paper it's a sale, but reality is a loan, right?
Exactly, Mukris. And the security act as a collateral, which is in Malay, cagaran, to our listeners that didn't understand English very much, which make repo a low risk, especially with instrument like Malaysian government securities. To give you guys a little bit more explanation that are nearly by your heart, you think like a goal. In Malay culture, I don't think in Malay culture, I think in all people on the world, if they buy gold, they're going to sell it later because gold actually didn't have so much inflation. So when you buy gold, you keep it as long as possible, and when you sell it, you can sell it at higher price. So the gold act as a collateral whenever you want to redeem it. But if you can't redeem it in the short or long term period, the gold will be the shop's owner. So I
yes,
guess
right.
right, you understand, right?
Yes.
Yeah. So that is repo.
Okay, I think it's a little bit confusing, but can we make this super simple? How about you, Bijan?
Yes, can. So, for example, we imagine we have a laptop and we sell it to a friend. So we can get a quick cash. For me.
Well, based on your explanation, Pijan, what I understand is you sell it first, then you buy back at slightly higher price next week, right?
Yes.
The extra amount is actually called repo interest, right?
What will happen if you don't buy back at the period of time?
What will happen? Your friend will keep the laptop and just like collateral, like a repost because you don't pay it. Yes, like that.
Yeah, okay, that's actually click. So now we move to who use repo. Okay, Pijan, who actually use repo in real life?
For me, central banks are the big one because they use repo to control liquidity in economic system.
Well, you got a nice explanation there. I understand that it's like managing how much the cash flowing in the system, right?
Yes, for example, too little cash, they will inject the money. But when the cash is too much, they will pull it back using reverse repos.
So that is central bank's repo. How about normal bank repo? Anybody?
Okay, for normal bank, use repo daily for the short-term cash need, and for investment bank, use them for finance bond holding. And Hadi, I want to ask you about the money market fund.
So for money market fund, they actually use repo to park their money, park their cash at there. So it's not really crucial because they use repurchase agreement to park their money because it's actually very low risk and short term. So that's the main point why money market fund use repurchase agreement. So we already talked about who use repurchase agreement. So I guess we can take a little bit rest.
Yes,
So
can.
we also need rest, guys.
Yeah.
So we will be back
In 5 minutes.
in 5 minutes.
In 5 minutes.
Bye. Okay, so hi guys. So today we are with Cik Muhammad Jasfam Syairi, right?
Yes.
So this is our man from Bank Negara Malaysia. He's one of the agent, and today he's gonna talk with us about what's the specialty of Bank Negara.
So for our specialty is we strong focus on Islamic finance because we use dual system that is conventional and Islamic. And then we also protect our consumer because we use fair banking system. And last is we encourage economic growth because we encourage to people to use digital system and fintech.
Okay, so what do you guys wait for? Let's go and use Bank Negara as proud Malaysian. Bye.
A few moments later.
Okay, guys, we are back now. So we start from how a report works. Let's break down in first step by step. So let's go.
Okay. When we're talking about repos, we start from day one, which is a bank sells securities and receive cash from the investor.
Mukri, step straightforward, please.
Okay. The repo could be overnight, a few days, or maybe a week. So you could see that it's a short-term investment.
So it's really short term.
Exactly. On maturity date, the bank buys back the securities and pays interest to the investor.
And what if bank can pay?
Well, the investor gonna keep the securities.
Oh, that's why the repos are safer than a secure loan.
Yeah.
So we're gonna talk about what investors and bank are actually like repo. I'm gonna talk from the investor side. They actually like repo because of their short term and safe.
Plus, return are fixed, so you gonna exactly know how much you will earn.
They are also liquid, but your money isn't tied up in the long term.
For bank, repos are provide a fast funding without permanent selling asset.
And compared to unsecured borrowing,
It's more cheaper, faster, and flexible.
So repo actually helps bank to manage daily cash smoothly.
well, I guess it is less panic and more stability for us. So let's wrap it up. Let's share our last final thought about why repos are important for us. Okay.
So, for me, why are repos is important? Because they make short-term borrowing efficient for a bank.
Wow, that's good point, Hafiza. But I think they help to stabilize the financial system. What about you, Shakirin?
For me, there's three: safe, flexible, and predictable.
Gonna keep it simple. It's essential for bank cash flow. So Mukris, any last thought?
Well, I think that's all we got for repos that we
Yes.
talk about it. I hope you guys get it, and see you guys in next episode of our podcast. Bye bye.
Bye bye.